Everyone's talking about AI now. They have the stocks, they've seen the headlines, they've noticed the charts that keep going up. But here's what almost nobody is asking. What happens when the excitement fades and the true infrastructure gets valued? AI isn't new anymore. It's been 3 years since ChatGPT launched. Since then, the noise has only grown louder. But beneath the hype, something else has been happening, something most people are missing. AI has already moved from potential to actual power. It's not just about which startup raised the most money or who showcased the flashiest demo. The next wave of gains will go to companies that don't just build models, they distribute them widely, integrate them into the real economy, and secure demand for a decade. That's the part no one is prepared for, the stage where execution outshines excitement, where infrastructure is more important than innovation, where the winners already have a lead that no new player can close. This isn't about predicting the future, it's about recognizing who's already winning and why. Today, I'm going to show you how to ride the AI wave, but first, here's something every investor needs to hear. Most investors are losing money and they don't even know it, not because they picked the wrong stock, but because their cash is sitting idle. Moomoo isn't just today's sponsor. They're the only platform I know that actually pays you up to 8.1% just for parking your money. Moomoo is literally giving away stock from one of the most valuable companies in the world, Nvidia. Fund your account and you can get up to $1,000 in Nvidia shares. No guessing, no hoping, just free stock based on how much you deposit. It's real. It's running now, but only through my link in the description or this QR code. AI is changing the game, and Moomoo is using it the way it's supposed to be used. Instead of spending hours reading reports, watching charts, or chasing headlines, Moomoo's AI stock analysis pulls it all together in seconds. It scans everything: earnings, charts, sentiment data, and gives you the key facts you need to make smarter investments. You want edge? Moomoo gives it to you. Their next day trend projection shows where the stock might go tomorrow, visually, no guesswork. You also get free Morningstar research just for funding your account with $100. Aggregated news, institutional ownership, insider activity, short interest, technical sentiment, it's all there in one place. Robinhood doesn't do this, Webull doesn't either. If you're serious about investing, Moomoo's already playing at the level you're trying to reach. Here's what you get: up to $1,000 in free Nvidia stock, up to 8.1% APY just for parking your cash, and commission-free trading on stocks, ETFs, and options. But here's the part you need to get right. You only get this deal if you use my link or the QR code on the screen. It's running now, but only through the link in the description or this QR code. Most investors still see AI as a product, like a chatbot or a tool, but AI isn't something you buy. It rewires systems, and it's already doing that. Here's a number that should get your attention. AI influenced $14.2 billion in online sales this Black Friday. That's not just a prediction, that's real revenue, with $3 billion of it coming from the US alone. Not from ads or speculation, but from software agents making decisions at checkout, chatbots assisting shoppers, LLMs guiding product discovery. AI is embedded in the consumer layer at scale. AI-driven shopping traffic rose 805% year over year. That isn't just a sign, that's full deployment. Walmart uses it, Amazon uses it, retailers everywhere are adding agents that turn attention into sales. It's already changing how people discover products and how money flows. Most investors missed it because there was no announcement or viral clip, just quick economic absorption happening at speed. This is the new game. It's not about who builds the most impressive model, but about who gets it embedded where it matters. The companies doing that are already growing quietly and relentlessly without any warning. Some people think the economy is strong because the market is soaring. That's a lie people tell when they don't want to examine the details. Right now we have two economies. One is shrinking. Job openings are down 30% since ChatGPT launched. Manufacturing and construction are struggling. The labor market is weakening. Credit is tightening. Real businesses are suffocating under capital costs. The other economy, it's AI. Since November of 2022, the S&P has gained over 70%. Not because everything is improving. A few companies are pulling the entire index up. Nvidia, Google, TSMC, Microsoft, Meta. This is not a rising tide. This is a few ships with engines while everything else is dead in the water. Still, most investors think they're winning because they bought one stock with AI in the name. Maybe you bought Nvidia at $177 and told yourself you were early. But if you don't understand what makes Nvidia successful, you're not early. You're just riding momentum and hoping it continues. You're betting on a chart. Someone else bought TSMC when no one was discussing power constraints. Someone else chose Google before it licensed Gemini to Meta's entire app stack. You feel smart. They're making money. There's a difference. This isn't about being early, it's about understanding why something works before the results show up in earnings. The AI economy is racing ahead. Everything else is pleading for a rate cut. One is growing through actual results, the other is stagnant on hope. And the longer this continues, the wider the gap becomes. The loudest people in the room are calling it a bubble. They said the same thing about the internet. They weren't wrong, they were just early, scared, and broke. What we're seeing right now isn't froth, it's focus. AI isn't inflating the market, it's reallocating capital, fast. 75% of the S&P 500 gains since 2022 came from AI-related companies. That's not random. That's performance falling into place around execution. Let me make this clear. This isn't like 1999. Back then, everyone was guessing. Revenue didn't matter. Profits didn't exist. Companies were valued on traffic and potential. That's not what's happening here. Nvidia's forward contracts total over $307 billion. Alphabet's cash flow is growing in double digits while deploying LLMs across Search, Workspace, and Android. TSMC is shipping 2-nanometer chips with 30% better efficiency, exactly what hyperscalers need to meet power needs. This isn't speculative, it's scaled product, active cash flow. Demand bottlenecks and systems that are already getting integrated into consumer and enterprise layers. So yes, valuations are high, but that's not irrational. That's pricing power for companies with advantages, good execution, and solid infrastructure. This isn't a bubble, it's a shift from broad indexes to concentrated dominance, from story stocks to delivery machines. If you don't understand that shift, you're not in the wrong trade, you're playing the wrong game. The $14.2 billion sales signal everyone missed. Everyone says AI is the future. What they miss is that it has already moved ahead of them. This Black Friday, AI agents influenced over $14.2 billion in global sales, with $3 billion coming from the US. That's not just a theory, it's data directly linked to conversions, not just traffic. AI didn't just help you shop, it selected the products, it compared prices, it prioritized inventory, it recommended the checkout path, it transferred money from intention to transaction across millions of customers at scale in real time. This isn't AI promising to change commerce, this is AI already running it. And it wasn't ChatGPT, it wasn't flashy apps, it was embedded agents from Amazon, Walmart, and Shopify. Background tools that are quiet, invisible, and highly effective. Traffic to these tools increased by 805% year over year. That's not adoption, that's consumption. You don't see that kind of growth unless it's already working. What matters most is that none of this appeared in your AI stock screener. These weren't headlines, they weren't mean charts. They marked the start of AI flowing through the real economy. So while most people are still focused on GPUs and waiting for a breakthrough, the smart money is paying attention to deployment because that's where the leverage exists, not in speculation, but in distribution. Most people believe AI is a rising tide. It's not. It's a furnace. And most of these startups, they're not going to ride the wave. They're going to get burned by it. Here's why. AI is the most capital-heavy wave of innovation in 20 years. Many of these companies are spending $300 million to $800 million a quarter just to stay afloat, and most of that is debt or equity loss. Margins collapsing, power issues everywhere, and they're growing as if the cash will never run out. That's not innovation, that's a disaster. You don't get rewarded for building quickly, you get rewarded for making a profit under pressure. Most of these companies will never reach that stage. The GPUs will become outdated, the debt will increase, and the runway will end with no cash, no advantages, and no loyal customers. Everyone wants to buy a stock that 10x's, but the moment it drops 15%, they rush to Reddit to ask if it's over. You're not thinking long term, you're just unprepared. You treated your position like a lottery ticket, and now you're upset because the chart turned red. The stock didn't let you down, you did. You thought AI would make you rich just because someone mentioned paradigm shift on a podcast. Go back to paper trading. At least then, the only thing hurt is your pride. This is why most investors will lose money. They're chasing trends in companies that can't survive. The ones that will, they're not loud, they're not trending, they're already getting things done. They have scale, real cash flow, and systems built for distribution. Let's cover the top 3 AI stocks for 2026 and why they'll dominate. We're not chasing headlines here. We're looking for execution. These 3 companies are positioned to dominate in 2026, not because they're trendy, but because they've already built the foundations that others are still pitching. They're not riding the AI wave. They are the wave. Let's break them down. First up, Nvidia, ticker NVDA. And if you want these same indicators on your charts, there's a $1 trial link below. Here's the bull case. Nvidia is no longer just a chip maker. It's the toll booth of the AI economy. Over $307 billion in forward contracts are already booked through 2026 for Blackwell and Rubin chips. The competition hasn't even figured out how to match the last generation, and Nvidia is already 2 chips ahead. Margins still strong. Ecosystem still locked in. Every hyperscaler, every LLM company, every government racing to build sovereign models, they're all lined up at Nvidia's door, not because they want to, because they have to. The bear case. The risk here isn't demand, it's expectations. At around $177, the market's already pricing in nearly flawless growth. Any supply chain hiccup, geopolitical disruption, or slowdown in hyperscaler spending could snap sentiment hard. There's also rising noise around in-house chips. Amazon, Meta, Google, and Microsoft all want leverage, not replacements, but options. The bottom line, Blackwell's already sold out. The only thing I'm watching now is execution, because when $307 billion in orders are on the line, delivery is everything. My thesis, bullish. Volatility doesn't scare me when revenue is contractually locked. Next up, let's cover Google. Here's the bull case. Everyone thought Google missed the AI wave. That take is now officially dead. Google just licensed Gemini to Meta, injecting its model into Facebook, Instagram, and WhatsApp. That means Gemini now touches more users daily than OpenAI, and it's not even fully deployed. Here's what most investors don't see. Meta isn't betting on Gemini because it's faster. They're betting on it because it's not Nvidia. This deal isn't about speed. It's about leverage. Meta wants a second source. They're tired of feeding Nvidia's 73% margins. That's where Google's TPUs come in. They're not designed to beat Nvidia. They're designed to weaken Nvidia's chokehold. Meanwhile, Google's cloud business just delivered $15.2 billion in revenue with 34% year-over-year growth, and margins are expanding. Gemini already processes 7 billion tokens per minute, and Google has over 300 million paid subs across YouTube Premium and Google One. The bear case. Gemini's still unproven at the frontier model level. And while the platform is growing, Google is sitting at 14% revenue growth, slow compared to its valuation. The real threat? Execution risk. If Gemini stumbles or fails to attract developers, Google becomes a distribution giant with no unique edge in AI. The bottom line, this isn't a pivot story, it's a platform story. Google's been building the full stack AI machine, from TPUs to cloud to model to distribution, and now it's scaling. My thesis, I'm bullish. I'm watching Gemini integration velocity and developer adoption. If that lands, this stock rewrites its narrative in 2026. And finally, we have Taiwan Semiconductor, ticker TSM and known as TSMC. The bull case. Here's what so many people don't understand. Nvidia doesn't make chips. AMD doesn't make chips. Apple doesn't either. Taiwan Semiconductor makes the chips. TSMC is a foundry. They manufacture semiconductors for the world's biggest players, and they do it at the bleeding edge of physics with unmatched precision and scale. Their new 2-nanometer process cuts power usage by 30%, which is critical now that data centers are hitting power limits. As the only company building at that scale, with that efficiency, TSMC isn't just enabling AI, they're deciding who gets to run it. Every time Nvidia books a sale, TSMC books a job, and they've got decades of trust, contracts, and capacity behind that engine. The bear case. The biggest risk here is geopolitical. TSMC operates in Taiwan. Any instability with China, even without war, could trigger capital flight or major supply chain disruptions. There's also demand risk. If chip orders slow or power constraints stall cloud expansion, TSMC could be left with idle fabs. The bottom line, TSMC is the most important company in the world and very few people get it. You don't have to pick which chip designer wins, just own the one that prints them all. My thesis is bullish. Risky environment, unmatched position. I want exposure to the engine room of AI. Now let me ask you something. Is anyone else breaking down the AI ecosystem, the Nvidia, Meta, Google triangle, and what it actually means for your portfolio while showing you exactly how I'm building positions in real time? Who else is giving you both sides of the trade, anchoring it in execution and cutting through the noise? Nobody. That's why I'm up $2.23 million this year. That's why my portfolio is sitting at $5.72 million, up 64% year to date. But it's not just me. Freaky Trout pulled 98% annualized running a trade strategy I teach step by step inside the group. Steven locked in $4,438 in profit last week alone. Clean, clear, no fluff. Sam locked in a 29% gain in 1 month while the market barely moved. These aren't cherry-picked. They're what happens when you stop chasing noise and start thinking like a professional investor. Inside my Patreon, you get real-time trade alerts. Every entry, every exit, every reason. Daily market breakdowns. Only what matters, no noise. My daily hot stocks, the exact tickers I'm watching that day, and access to the sharpest, most data-driven investor community out there. It's $30 a month. Instead of blowing that on bullshit, put $30 into something that actually makes you better. If it doesn't 3x your investment in yourself, cancel anytime, no pressure, no gimmicks. Many of my members have been with me for over 6 years. Why? Simple. It works. So here's the real question. Are you going to keep watching other people win, or are you ready to become the next success story? Because the truth is simple. You can scroll or you can scale. But either way, don't say you didn't have the chance to level up.